we've got a grand finale, bringing Pat White, CEO and co-founder of Bitwave, back on stage.
I'm back. You can't get away from me that easy.
Take it away, Pat.
What's happening? Guys, that was an amazing panel. That was really fun. Kimberly, I the transaction count thing, I had no idea. Because I talk about like, oh, our biggest clients have like, 3 billion transactions. Like, nope, I was wrong. Our biggest clients are way bigger than that. So absolutely amazing. Great panel. Really, really good stuff. And really fun talking about like the standards there. Well, guys, I'm going to bring us home here. 5:30 on the East Coast, 2:30 on the West Coast. It's time to start getting for the happy hour. I wish next year we'll do for the virtual EDAS next year, we'll do a happy hour, a virtual happy hour at the end of it. But this is my favorite thing I get to do every like somewhere between 6 and 12 months. This is our state of the enterprise digital asset industry. So, we get to talk. I feel like my life gets really divided up between spending a lot of time on very tactical things like, impairment bugs or discussing Snap 2 pricing and stuff like that. That every now and again, it genuinely is fun to step back and think a little bit about the overall industry that we're sitting in here from a more macro perspective. So the way that we actually set this up is we have 2 sections. This is the same thing we did at EDAS in person, where we basically have a macro section talking about macroeconomic trends, macro forces that are in play here that are impacting our lives every day. And then a micro section where we kind of bring that in and actually talk about the nitty gritty of what both we're dealing with as cryptocurrency professionals, but then also what, one of the big things here is going to be what are the trends that are going to impact you as a finance professional in cryptocurrency. So there's a couple of really nasty things, like in a good way, like stuff that we love and it's an amazing world and oh my God, so much innovation, but stuff that's really going to make your job as accountants more difficult. And, hopefully, Bitwave, we've got stuff to help with that. So it should be fun. So we'll start on the macro side. The first thing that we should talk about is that we are moving aggressively close to having a BTC ETF. And I think, or an ETH ETF as well. Really, there's been some really notable court case losses by the government, which is kind of like, it's sort of funny that what's happened is that Congress has kind of abstained from doing anything. I'll talk about this more, but, Congress has kind of abstained from doing anything around digital assets. The SEC has been aggressive in a completely kind of incongruent, very haphazard way. And so what's happened is that it's ended up on the courts to do a lot of stuff. So one of the big cases was obviously whether or not the SEC should have rejected a Bitcoin ETF. And the court was the one that had to finally come and say, guys, like you allow there to be an ETF that literally just shorts a TV personality's stock picks. Why can't there be one for Bitcoin? I don't think that was exactly the ruling, but it was. I'm sure that was in his mind when he was when they were writing it. So we're moving closer to a Bitcoin ETF, and this is obviously going to have, when that launches, if it's BlackRock, BlackRock has like $20 trillion. And every time I say that, I have to go and look that number up, but $20 trillion under management. So if like 1% of that moves to Bitcoin, you just had a monumentally good movement towards $100,000 in the Bitcoin ecosystem. So I think like from a pricing perspective, this is all good stuff here. Now, where I get more, it's the right word, where I have more pause around the Bitcoin ETFs is that I don't think ETFs are a very crypto-y sort of thing. Now, I think it's all fine and good, and getting more people access to crypto is a good thing. But ETFs are the opposite of decentralized. They are hyper-centralized around the literally largest financial institutions that exist in this world. And it kind of gives me pause, like whenever everyone online gets so excited about Bitcoin ETFs. And I think that's because a lot of people just care only about prices. For me, I'm like, is this really what we all got into this to do? Like, or do we all get into this because we all have this like underlying, maybe a little bit of distrust of traditional financial institutions, and we want to cut out more middlemen, and we want to actually have more control of our own financial destiny. And maybe an ETF is not exactly how we want to do it. So it's one of those like kind of 50-50 ones for me, where I like it. It'll be good for the price of Bitcoin, but I'm not sure it's great for crypto in general. That's a tough one. So like I said, the other big macro trend is crypto's been going to court, and honestly, crypto's going to court. And crypto's been winning, which is the fun part. And part of that is, it's easy to say. There's two big pieces here that I always like to talk about, and I might have even mentioned this in the EDAS live, because I say this a lot, and it continues to be true. And I'll stop saying it when it stops being true. But regulatory agencies in the U.S. have an incredibly vested interest in maintaining the gray area around crypto. It's one of those things, like, you might think of a regulatory agency as a defender of individuals, or a construct set up to enforce rules and stuff like that. But any institution that employs human beings becomes a self-perpetuating, or it has the goal of being a self-perpetuating institution. Like, that's just the nature of it. You can't start something and give someone a job that they are then going to be like, hey, I'm doing everything in my power to get rid of my own job. And so that goes for these regulatory agencies, which is that it is by far in their best interest to have a maximum amount of gray area in regulatory enforcement, because it means that they all get to kind of assert themselves, and that'd be the CFTC, the SEC, the Consumer Protection Bureau. They all get to kind of assert themselves on crypto, and they all get to kind of justify their existence and continue existing as part of it, and asking for more money to enforce these regulations. What happened, of course, is that's the part that's interesting is that is strictly from a very constitutional perspective within America. We actually have a lot of rights that reserve, whether or not they're in the Bill of Rights or anything. We have a lot of rights that are reserved for us as individuals and businesses in America. And so when you have regulatory agencies that are basically like, hey, we're not going to clarify rules, and we're just going to do this through enforcement, at some point courts do actually put the kibosh on that, because that's really, there's a lot of ways you could read it that's non-constitutional. There's a lot of ways to look at even something like the Howey test written in the 1930s being applied to something that was inconceivable in the 1930s. I mean, they barely had light bulbs, let alone microprocessors, let alone cryptography, let alone Bitcoin. And so the courts have really been stepping up here and saying, guys, you have to figure out what's going on here. The notable ones, like Uniswap's a great example. The court case, it was a lower court, so it's not necessarily this is going to be binding for the entire universe, but the idea of the lower court saying that ETH is a commodity, that's going to scare the crap out of the SEC, because that takes ETH, Bitcoin, all the L1 tokens completely out of their jurisdiction. And so the fact is, if that ruling stands, that's precedent for people basically saying, hey, the SEC can't sue me right now because they don't have jurisdiction over this. So this is going to bring more and more people to the table. So outside of everything else, these types of court wins are bringing people to the table. Now, I'll say on behalf of Bitwave and behalf of everyone here, I love that Coinbase is going aggressive after this stuff. This is a quote from their CLO. I love that they are no prisoners attacking everybody that they can on this from a legal standpoint, because we need defenders, and maybe they're kind of the Batman figure right now that is going Dark Knight Justice over everybody. But it's great to have that out there. So there's a lot of court cases, but a lot of these court cases are turning up crypto, which is great tailwinds for the industry here. And then this, Trevor helped me put this all together. Trevor put this together, and this is one of those things where you sometimes when you're going on a hike, and it's not until you turn around, you look back down the mountain, that you realize how far you've gone. And this is kind of like that. It was I had no idea how many freaking bills there were sitting out there that we're working on across the entire spectrum here. And I think this speaks to the previous slide as well, which is that, the court cases, because the courts are it's always going to be a coin flip. It creates a really, really bad situation if no one's regulating something and the court decides that. Congress is finally getting serious about this. We see a lot of cross the aisle stuff, which makes me super happy. The only thing that I wish for in this world, if I had a genie, and this would probably turn out badly, but if I had a genie lamp, I would wish that crypto is a non-politicized innovation, because it's not Republican, it's not Democrat. Is this genuinely individual empowering kind of technology? And so you see a lot of really good cross the aisle stuff here, which makes me incredibly happy. So the Loomis Gillibrand bill is still floating out there. They were always anticipating that would not come through until 23, 24. So that's still floating out there. A bunch of other great stuff around stable coins. They're trying to limit them, rein them in, but there's just tensions between individual rights and state rights and things like that are keeping these bills all moving. So great, a lot of movement on that side. So I think we at Bitwave have seen a lot of movement out of the US. I mean, there's no other way to say it. Like, we've had customers, they got a CFTC notice and shut down their US operations and moved to Portugal. And that sucks. And it's insane for me as like a US citizen. It just drives me absolutely nuts that we would do that, because it is just driving innovation away at the cost of rent seeking. But we're now finally starting to see people really come around, more effort being put towards normalizing this, is because Europe is becoming a hotbed, Singapore, Hong Kong, all of those things. Hong Kong, China doing something gets the US government in action real quick. So if they think there's a chance that China will outkick us on innovation, of course the US Congress is going to get involved really quickly. And then this is great. So Trevor did a little bit. So this was Chainalysis' report they released yesterday about adoption across countries. And then Trevor went and he actually looked at last year's report and showed how some of the international markets have actually moved. So India is up 3 places from last year. Nigeria is way up. Now, what I love about this slide, this just continues our payments, right? Because India, they're not, in India, they're not adopting crypto to go into, to pay $75 fees and go into crazy DeFi protocols and stuff like that. This is a lot of remittance. This is a lot of point-to-point payments. And I always talk about this. Like, if you've ever sent money to India to pay a contractor or family or whatever it is, I've seen fees as high as like 10%. By the time from when the bank when money leaves my bank account to when it gets to the other person, you can see fees up to 10%. This is exactly what crypto's here for. Like, this idea of literally middlemen at like moving bits in databases and then taking 10% for that is ludicrous. And so you get why, India is moving that direction. Nigeria has a very long history of unbanked population. Nigeria famously is the country that, they have instances of using cell phone credits as money. They kind of skipped hardwired internet, went straight to cellular internet all over the place. So this is another place where it's a story about banking the unbanked, which we all get excited for. And again, banking the unbanked is payments. It's, hey, can you give me a ride into town? Here's $3 that I'm sending you to cover gas. Like, it is again all about payments. It's not. We'll get there eventually where India and Nigeria are using these, are going into DeFi and doing all this crazy stuff. But right now, this is all about. It's all about hedging against local currencies, so basically making sure you have, access to US dollars and hedging against local currencies, and then all about payments and how you can kind of move it that way. US moved up, but I think that's a little bit more of a sign of like some of the other movements down the side there. But it is notable that the US is not number one here. And even, Hong Kong, China, things like that are not up here. So really interesting. I love this because it just shows what we've all been talking about for a long time, which is this idea that the international markets that are developing nations are really going to latch onto crypto. As the term third world was originally, for people that know the history, it was originally meant to be a demarcation between, you had US and the USSR, and then you had a third option, the third world. And I think that kind of speaks to this is where we are right now. Of, you have the US dollar as kind of a reserve currency. You have other people vying to be that reserve currency, right? The ruble is trying to be the reserve currency. Obviously the yuan is trying in their sphere of influence. And I'd say that Bitcoin and crypto ends up being kind of a third world option here. It ends up being the third option of like, all right, I don't want US dollars. I don't want yuan. I want Bitcoin as my currency. And you can actually opt into that. Really, really cool stuff here. So that's the macro landscape that we're looking at. The micro landscape is really, really fun too, though. So we're seeing just enormous pickup of stablecoins. Like, stablecoins are all over the place. They will continue to be the biggest driver of innovation in this space for the next year or two. So in the same way that payments is all stablecoins. Like, no one is paying bills. I shouldn't say nobody. Most people are not paying bills in crypto, in like ETH or Bitcoin, things like that. Most people are paying bills in stablecoins. It's super obvious, right? Like, at this point today, ETH and Bitcoin are both depreciating assets. People don't like paying bills and depreciating assets. US dollars is a incredibly inflationary asset right now. Fortunately, we're getting a little bit of rain on that in the US, but still, it's an incredibly inflationary asset. So the idea of paying money with it is just so much more appetizing or palatable for folks. So stable coins are just a really natural progression there. The Visa move onto Solana, it's always hard to tell from the outside how real these things are, but Solana's, if Visa does 35 million transactions, some number, some denominator there. And Solana can do that same volume as they scale up to it. So that's probably where everyone's sort of thinking about this, and it's really fun. So this continues to be a remarkably important part of the industry. And Swift just launched their CBDC sandbox. So if anyone out there is tied into the Swift ecosystem and getting that sandbox, A, reach out to me. That sounds awesome. But B, this is really exciting because obviously, sandboxes are not guarantees that there will be movement on the other side of it, but I think it's pretty likely that we're going to see a real CBDC offering here, and it might even be that the Fed, the fast Fed payments is going to be a little bit DOA, while CBDCs are kind of close behind it. If there's been one trend from today across everything is that layer twos are taking off, and the last talk we just had with all the L1s that are sort of focused on different problem spaces like higher transaction throughput, like all these different things here. That's the trend of this. Like the very first question anyone asked today was asking about if fees in Bitcoin are going down or up. Or like it was about like how you factor in fees with payments, and so that directly relates to this. Like L2s are taken off because they optimize for different things. They don't optimize for security, or privacy. They optimize for cost of transactions or whatever it is. So this has been an enormous pop off this year. We've certainly seen it. Like every one of our clients uses Polygon. Every one of our clients uses Arbitrism or Optimism, and you saw Celo moving over to doing an Optimism based, Coinbase doing an Optimism based L2. There's actually a really interesting part about this, which I think is really interesting, is that we are starting to see some leaders emerge in that space. So between the Celo announcement base and then Optimism in general, the Optimism technology is doing really, really, really well. Like it is coming out as one of the leaders, and optimistic rollup tech is coming out as one of the leaders in the L2 space. And I didn't think, for what it's worth, we would see that this year. I thought we would not really see consolidation or alignment to one or more technologies in L2 space for the next like 5 years. I thought they would just be incredibly fragmented. But you actually see the fact that a lot of people are moving to the OP tech is a really strong endorsement of what they've built over there. So it's something to think about, something to kind of continue on. But yeah, Base's launch was amazing. Last EDAS, we mentioned ETH2 staking. It has continued to be a major player here. It has gone just absolutely nuts. So this is the number of staking transactions per month. I have ETH staked. I think a lot of people at Bitwave have ETH staked. A lot of our customers have ETH staked. It's just it's super natural because it does these sort of dual efforts of protecting the ecosystem, protecting the integrity of the network, but then earning a little bit of yield. And that's why we are all here. Like we are all here for the ecosystem and then to make money on top of it. So staking is very natural. We've got some really cool stuff that we've pushed out around this. If you're doing any ETH staking, it's worth reaching out to your solutions folks, your solutions contact, your customer success rep. Because we actually have a lot of ways to track staking rewards on a more point by point basis now, which is really, really, really cool. So if you need anything there, hit us up on that. Okay. Let's now deep dive into what's the stuff that's going to make your lives interesting over the next like six months here. That's my best way to say it. So don't worry, everything that we're about to talk about, Bitwave has either we currently have solutions around, or we have plans to make solutions before it's going to impact most of our lives. But it is worth thinking about these a little bit. Okay, so the liquid staking derivatives is, gosh, I don't even know where to talk. I don't even know where to kind of like start here, because what's happened is as people went and started staking ETH, when you stake ETH, you lock up your ETH. And that's great for you if you're like a long-term investor, but it means that you don't have any liquidity in it. So what's happened is that with liquid staking, people have created pools where you are basically buying a share of a pool. Your ETH goes into that pool. It gets staked by somebody. They have these complex basically complex algorithms that they then do, that they then run their staking nodes with. It gets locked up there, and then you own a token that usually will be sitting at a discount. Now, from an accounting perspective, there's a couple of things that are super nasty about this. First and foremost, this is a weird derivative product, right? Like it is in the same way that some of this DeFi stuff and all these different things we've talked about, these are weird derivative products that you are holding a token that is a pointer to another token that you've essentially lent out. So it's kind of a derivatives contract on a token based basis. So as you hold this over period closes and stuff like this, like you're kind of holding an embedded derivatives contract, again, depending on what your accountants see. The other thing that's crazy about this is that people then take this, and one of the things that liquid staking is pushing out is you can take your liquid staking tokens, stake them, and then withdraw what they call EUSD. So this is a stable coin that is, so it's one-to-one backed by stable coins, by USD stable coins, USDC, I think. But what they're doing is then they take the interest that you're earning, and your stable coin itself rebases. So if you guys remember rebasing tokens from the summer of DeFi, hopefully you don't have to deal with them too much anymore because they are real nasty. But you basically need, what happens is that you don't see a deposit into a wallet, but every day or every week, you basically just have a higher balance in your wallet than you had the day before. So that's how rebasing, it could happen on epoch or week by week or whatever it is. That's how rebasing in general works. And the rebasing stablecoins might do it block by block. As interest is accruing or as yields are accruing from the staking, that then gets fed back to the community. And I think it's incredibly safe to say that we're going to see this across the board, because someone like Circle, which partner, we love them, they're great. They make their money basically taking the raw US dollars that are given to them and putting that to work. And then they issue you a stable coin, and you kind of get value of that because that stable coin allows you to go and use USDC with on-chain protocols. Their margin is the delta between like the yield that they're getting off the stable coins in T-bills or in investments or whatever it is, rehypothecating that, and then their underlying cost, which is essentially zero because you're getting handed that. Well, like any good business, that will start to drive to zero. So other folks will come out who say, "Hey, we see you're getting 4% yield on your T-bills. I'm willing to take a 2% yield and split the other 2% back with the owners of my token." So it's not just examples like the EUSD here, where you're going to see rebasing interest-bearing stablecoins. Pretty much my prediction, and I've stopped making predictions in crypto as much as I can because they like literally never come true. But my prediction for this one is that by the end of next year, we are going to see this all over the place. Like everybody will have an interest-bearing stablecoin because it just market pressures will force all the stablecoin issuers to start thinking about basically earning yield on splitting the revenue that they're making off of the coins that they're holding. And at that point, it's, the way we handle this is you can set up a special wallet type in Bitwave, and we can actually track your balance day over day and record those interest adjustments every single day. So we have that today for a bunch of different DeFi protocols, Uniswap, all that kind of stuff. If you ask anyone about it in Bitwave, it's called Advanced DeFi or DeFi V2. But that will grow to support all the rebasing stable coins. But we expect to see this. And if you're not using Bitwave, this could be really nasty to kind of handle here, because it's a lot of manual work to go pull that data together. You guys were all here. Everyone was here for the RWA, the amazing session on RWAs. This is a really fun one because we've been talking about it for a long time. And I think we are finally seeing it. Let's call it like next, like it's already September. So let's call it next year. We're really, really going to see this. Is that this is real world assets, whether that be a bond, a stock, a T-bill, my favorite of all of these is someone has a Rolex, that's been tokenized. Got to buy that one of these days. Whatever it is, you are taking real world assets, you're putting them on chain, you're using them for collateral and all that kind of stuff. One of Kuhn's posted this earlier today that someone, just the most amazing, like this thing that makes me so happy about crypto. Someone has a collection of Supreme t-shirts. So this is like turtles all the way down, because I always used to describe NFTs as like Supreme for like the next generation. Maybe like, if you know what Supreme is, it's a clothing brand that has kind of artificially low distribution and production to keep it like really, really special. Like I always tell the story that I was in Tokyo and I was like walking down the street and I saw this line of like literally like probably like maybe 5,000 people. I was just like I was walking. I finally get to the front of this line, and I see this person. I'm like, dude, what in the world is this? It's just like, oh, there's a Supreme store around the corner. We take 3 people at a time and they can go shop. And I'm like, what? Like, there's 5,000 people. Anyways, we're seeing. So someone actually basically took their Supreme T-shirt collection, tokenized it, got Sotheby's to value it, and then took that token that basically represented, sent the t-shirt collection to escrow, took that token and borrowed against it. So it was a $2.5 million collection that they then borrowed $1 million against. So the idea behind RWAs here is this idea that we are really going to start to see every kind of conceivable thing from the real world start to get on the blockchain. And then it's the building blocks, right? It's the building blocks that we've gotten through that have gotten us here. That says like all the stuff around NFTs. Like we had to go through the summer of NFTs and all that craziness to get to RWAs. We had to go through the summer of DeFi and all that craziness to be able to then borrow money against an RWA. But now we're starting to see all these building blocks are like really, really coming together and allowing us to do really, really cool things. But from the accounting perspective, oh my God, now you really, again, everyone, I guess if I have one bit of advice, it's that everyone needs to go brush up on ASC 815. And we actually just are releasing, over the next week, we'll be releasing a Bitwave U course on ASC 815 for these things. We're looking more like invoices and receivables, but it counts for RWAs also, which is at the end of the day, you're holding a token that's a pointer to another token. Your token will get priced, like depending on how it gets issued, you might have a separate pricing. It might have a separate pricing from the underlying derivative asset. You are going to have to do some fancy footwork on the accounting side. Like if it's immaterial, your life's all good, move on with it. But if you actually are starting to have millions of dollars of RWAs, you suddenly have a very real something between embedded derivative or something between a true derivative or a options contract or a short position, depending on what the RWA is representing. So this is just going to make life more interesting. The way that we're approaching this is making sure we have really, we announced our NFT dashboard this morning. So we're continuing to make sure we have really robust options around NFTs. And this will be where we start to have, you're going to have to start to do some really clever footwork around pricing these RWA NFTs, because we might have to price underlying assets based off of, stock markets. And we have support for all that kind of stuff, but it's going to be a journey with everybody here to figure out exactly what that looks like. But just be aware, this is coming down the pike. This might not be on your 2023 taxes, but this is definitely going to be on your 2024 book closing, tax returns, all that kind of stuff. And it's gonna really herald in a pretty remarkable set of technology here. So it's going to be pretty fun. All right, we got 5 minutes left here, and I'm just so excited. So really quickly, for the people, for everyone that is here, we are announcing EDAS 2024. This was EDAS Virtual 23. This is EDAS 2024. Will be in Austin, Texas, May 28th. That's the day before consensus next year. If you go right now, this is the only time I will slip into YouTube personality is you can go and get tickets right now for $99. They will only be that price for a couple of days, for a month here, I think. So through September. But like, you guys are the only people to know about it because we're not announcing this or doing anything. So this is like basically a special for people that were here today. EDAS 2024. It will be all like, if you enjoyed today, which I hope everyone did, it was an amazing day. I cannot thank our panelists enough. Absolutely just mind-blowing, insightful commentary across the board. If you enjoyed today, edas.live, www.edas.live, buy your tickets. We'll be all doing this again in Austin in May 28th. It's going to be really, really fun. And I'm sure we'll have the same, a similar cavalcade of amazing people from across the industry here. Trev, are you still on with me here, buddy?
I'm still here.
All right, man. Well, hey, I think we almost made it. We might even end 4 minutes early.
Yeah, we're 4 minutes early. That's a record for us. So thank you again for everyone.
Thanks so much, everybody.
Yeah,
thanks to all the panelists. Thanks to all the attendees. Thanks so much. everybody for coming. It means a lot to us to show up, and we really appreciate it. Take us home, Trev.
All right. Thank you, guys. We will catch you in April and probably before that. So talk to you guys later. Thank you.